moving forward here, and this is the last recording and the last sub chapter for the second part, trading strategies, looking at the time frames. So when trading Ichimoku, medium to long term time frames. And while on the previous recording I looked at the 5-minute, 1 hour and 4 hour chart and played with and showed you the importance of looking at all these shorter time frames, you know, that when choosing the expiry date for the binary option, then it is time to see if the daily, weekly or monthly chart are of any value. Normally those are not considered to be tradable time frames, but you will see that Ichimoku allows us to find important support and resistance area based on that. So let's open please a new chart. So just click here, file, new chart, then we'll choose the euro dollar, and under our template here we have the Ichimoku, and we'll choose the daily chart we've said. Then of course we'll move on with the next time frame. So we have the weekly chart. We choose the template, the Ichimoku template, and again moving forward with a new chart here, the euro dollar. So we have we said the weekly chart, the monthly chart, and this is the last time frame. Basically this is what you look for in terms of time frames, and this is what each broker would offer. Now these are the medium to long term time frame: medium, daily, long term, weekly, very long term, monthly chart. You might wonder, why on earth would somebody look at such a time frame, as higher time frames are usually not being traded in the intraday basis? Well, it is not necessarily true that, as binary options can be traded on intraday basis. Can be traded on the end of week expiration, for example, or even lower expiry dates. If you are looking for on the monthly chart and your expiry date might be 26 periods forward, then you should take that into consideration. However, I don't know who's willing to take 26 periods, so 26 months as an expiration date for a binary option, but on the monthly chart and weekly chart we might find important support and resistance areas. The thing is that if you are looking for the Chinkou, for example, to bounce from a monthly chart when it is touching the candles in front of it, then this has a stronger chance of happening than if you are looking at the same pattern on the hourly chart, for example. Moreover, if the Kinjun Tenkan cross is happening on the weekly chart, then this is more important than if it is happening on the 4-hour chart or on the 1-hour chart. It means that the trend on the weekly chart is changing. This is a daily chart. This is, for example, the Kinjun, the Tenkan Kinjun line cross. But if you go on the higher time frames, let me show it to you. Take a look here. For example, we had the actual close yesterday here for price was, the close was 131, not yesterday, sorry, the previous week, 131.68. The close was last Friday. And if you move 26 periods back, you are seeing that actually the Chinkou Chinkou is finding itself as a major support area on the weekly chart, okay? So this is major support area for Chinkou, and this major support 26 periods back should translate into bullish price action at the current levels. And normally what one should do is to engage in buying calls with expiration date 2 weeks, at least 2 candles here. So look for 2 to 3 weeks, so 2 to 3 weeks buying calls, 2 to 3 weeks expiration date. what traders also do is when looking at such time frames, such big time frames like this is the weekly or the daily, the actual Tenkan and Kinjun line here, the values, see here, this is 131, 131.08. Whenever this is being touched at the exactly moment of time, look for resistance and bounce on the lower time frame. So this is a weekly chart. You go quickly, you identify that spot, you go quickly on the 5-hour chart or on the 1-hour chart, you identify the place, and you just go and buy calls for shorter time expiration date, like end of day or maybe a couple of hours or something like that. Now, the higher the time frame, the more important the support and resistance area, and this is being viewed that can be treated with end of day or even end of week expiration, like mentioned. On the monthly chart, how the monthly chart can be used? Yeah, well, it can be used in the same way like the weekly chart, looking at the actual, so the possible places, let's say the possible value for Kinjun and Tenkan to offer a strong rejection. For example, here, as you can see, the high here, the value for the Kinjun has been 133.69. The high for the monthly candle has been 133.44. So there is an educated guess that that area is an important area, and there is a strong tendency for price to be rejected. So going in end of week expiration or end of day expiration based on this outcome would be the most appropriate thing to do. With this, we ended the second part, trading strategies, and we've looked at the Kinjun Tenkan cross. We look at the buying the Kumo bottom, at selling the Kumo top, and that was for looking at the time frame, short-term time frames, 5-minute, 1-hour chart, and 4-hour chart, and medium to long-term time frames. There is the daily, weekly, and monthly chart. Stay tuned now for our third part of our project educational series, how to trade binary options when using the Ichimoku indicator.